It's been a bit of a weird week for me, to be honest. I didn't want to just come out and start ranting about GME and trading 212 without fully understanding what was going on. But now I've had a good think about it. Here's what I think. Welcome back everyone, my name's Paul. Now, unless you were living under a rock last week, you would have heard something about Gamestop and Wall Street bets. Everyone now knows what happened. Seriously, there were people coming up to me in the street, there were people coming up to me at work, and by the way, these people don't know I do this on YouTube. They were literally just asking me about what was going on because I might like memes. And I do like memes. I've been around Wall Street bets for a long time actually. But in case you didn't know what was going on with GameStop and Wall Street Bets, very quickly here I go. Wall Street Bets is an online forum where loads of retards get together to share loss porn. It's largely loads of online bullying and loads of hilarious memes. But a few of the members in there realised that they had enough people in there now that they could perform a short squeeze on one of the most heavily shorted stocks in history. They whipped literally millions of people into a frenzy and got them to buy GME. Seriously, people I know have signed up to Trading 212 just to buy GameStop and stick it to the man. And I do really love this movement. 25-year-old me would be all over it, but 30-year-old me has got a lot to lose these days, so I ain't going near it. And I'm glad I didn't because a lot of people lost a lot of money. And I applaud this guy's brilliant job for sticking to it, but this was dumb. And if you think I'm being against it there, you don't get what Wall Street Bets is about. It was all about taking on the hedge funds, the guys that push all the money around, and they've been taking advantage of all the retail investors for years and years and years. But while they were taking out one massive hedge fund that was known for shorting, they were making one of the most famous shorters in history absolutely rich. You know, Michael Burry, they actually made a video about this guy called The Big Short. He's the most famous shorter in history, and he shorted one of the most horrible events in history in the stock market. The irony to me on this one is incredible. And also one of the biggest asset managers in history, Fidelity, made an absolute ton. They bunged in 10% of all the money everyone put in. So it was no wonder the thing crashed so quickly. Fidelity got in, made their money and got out, and then caused the crash. And everyone else was left with their diamond hands that slowly turned to paper. And unfortunately, people lost money. And what has annoyed me about the ending in this, and I know it's not quite over, it might bounce back, there's every tiny bit of chance of that. What has most annoyed me is it isn't the Wall Street bettors that have lost the money. The hardcore Wall Street bettors, you know, the ones that have been in there for like 2 years or so, they would have got in early and they also wouldn't have a problem if they did lose anything. The people that have lost are the ones that learned about it a little bit too late. And then they put in at 300-400, whatever it was. And those guys are going to be suffering. They're not going to find this as funny as what it's supposed to be. It was massively inflated by Chamath and Trump and even AOC. 3 people who really know how to jump on a bandwagon. And it's probably those guys that have caused all the misery. But everyone was very quick to shout, Robinhood is corrupt! Like that was news. And let's not forget the only reason they were able to perform such a brilliant short squeeze in the first place was because of Robinhood. None of this would happen if it didn't exist, but it also went badly because apparently it does exist. I can't work that one out. But according to Robinhood, it slowed down its trading because it simply couldn't afford the clearing fees. That's their excuse anyway. I'll leave you to decide whether it was market manipulation or whatever. Interactive Brokers was another broker that ceased its trading, and this is where it became much more important for the UK. Because most of us in the UK and even in Europe are using Trading 212. And in case you didn't know, Interactive Brokers provides a share dealing service for Trading 212, meaning if Interactive Brokers decide to not buy anything anymore, Trading 212 can't either. It didn't stop people going absolutely crazy though, accusing everyone of market manipulation. And this is where I've got to think, because it was a little bit fishy. The first message on the day that they stopped trading was, in the interest of mitigating risk for our clients, we have temporarily placed GameStop into a reduce-only mode as highly unusual volumes have led to an unprecedented market environment. So Trading 212 stopped everyone from buying it. And while most brokers did, I did find a couple of brokers that didn't stop trading it. eToro was one of them. I even almost bought some GME on there myself. But what they did do was stop the CFD trading on it, and you definitely could not short it, which did cross my mind a couple of times. Trading 212's wording on this was kind of loose. Protecting customers, was that what they were really doing? It sparks tons of investors to go out and say Trading 212 is not their babysitter. They can take all the risks that they want. They choose. And I get this point of view. It's a pretty strong point of view. If that was what Trading 212 meant. Because I don't think Trading 212 was saying that they were trying to protect the customers that were buying GameStop. Those idiots can go do whatever they want. But when everyone is trying to buy up stupid amounts of GameStop and AMC, and it's causing some brokers to take out 3 billion loans to cover the clearinghouses, there is going to be a serious debt crisis there, and some companies, if they don't manage that well, will go bust. So if Robinhood wasn't able to reduce the clearing fee and then wasn't able to raise that capital, they could have gone bankrupt. And that means that everyone who's on that platform and everyone who is trading options, their capital's at risk. And it's the same with interactive brokers, and it'll be the same with Trading 212 on the trickle down. So I don't think they were trying to protect the GameStoppers, they were trying to protect everybody else. And 3 days later, Trading 212 did bring out a wishy-washy excuse which kind of went over what I've just said. But why 3 days later? Was it just taking too much time to get their head around it? And what exactly was their exposure to interactive brokers at this time? So that's me laying out what actually happened. On one side, you've got a lot of people saying that Trading 212 is part of the market and manipulation. There's not a lot of evidence to that. Maybe up the chain there was some market manipulation that you could probably get angry about, but it was probably more of a trickle-down pressure effect rather than every broker getting together and going, let's screw over Wall Street bets. And on the other side, Trading 212 says that they had to keep the clearinghouses happy, which kind of makes sense as well. And don't think I'm just going to let Trading 212 off the hook here, because this has exposed a lot of problems that we're having with Trading 212. Whew, ran out of breath there. Because some of my key problems with Trading 212 that I've discussed many times before have raised their head again. Number one, Trading 212 has very, very poor communication with its customers. If you don't have much trust in technology and you don't understand what's going on at Trading 212 and you would prefer some face-to-face action, Trading 212 is not going to be for you. Hargreaves Lansdowne might have a better phone service. I'm not even sure of that though. Trading 212 have obviously tried to do a bit of communication, but it's not really good enough. Still, they have $2 billion worth of assets now, and we'd like to know that we could quite easily get to them in a crisis. Not in a stock market crisis, you've got no chance of getting your stocks out in a crash. I mean, if you personally need to get to your money quite quickly. And second is Trading 212's business model, where it relies heavily on interactive brokers. Now, I said this in a previous video that Trading 212 is going to be more and more at the whim of interactive brokers. And it looks like, although I personally can't say that right now, it looks like Trading 212 got shut down by interactive brokers because it makes the decision. Not that if Trading 212, if it went off on its own or with some other broker, wouldn't have suffered exactly the same problems. It just means that they're very heavily guided towards one broker, and that might be one thing that you might want to consider when analysing the risk, that Trading 212 is a bit at the whim of interactive brokers. But I think out of all this, after looking at that idiotic stuff on Reddit, people need to start learning what they're getting into. If you're CFD trading, you need to know that you're entering a system that is heavily weighted against you. And in the same way, if you're going with a free broker, you need to understand that business quite heavily and learn that they can shut you down at any time. You are choosing to go with a certain broker, and that means you play by their rules. And am I going to be switching over to another company after this? Probably not. Pretty much every broker was affected by this event, and do I really care that Trading 212 goes down for half an hour at the start of the open on a really busy day? Not really. I'm a long-term investor. I'm not looking to get my money out quickly. I'm not looking to put any money in quickly either. I'm still very new to investing, but at least I know that bit about the market. And on the whole, I don't think many other people are moving either. I think in general, most people know how it goes. And yeah, once I've filled my ISA, I probably will look towards eToro to start adding more funds into there. But even after all this, and I know that Trading 212 has a lot to improve on, I don't think I'm going anywhere. Thank you very much for watching, everyone. The investment app that I use is called Trading 212. If you wanted to get into investing and you wanted a free share that was worth up to £100, don't bother because they're not taking on new clients anymore. I think it's a temporary thing while they clear out their backlog, but yeah, they're not taking anyone on. So if you did want to get into investing right now, feel free to sign up to eToro. I've got a link in the description below. Feel free to use that to sign up if you wanted. eToro is the place where I go to get my Bitcoin and Ethereum at the minute. And eventually, once I've filled up my ISA, I'll probably start buying a few stocks in there as well. By the way, check out Bitcoin and Ethereum at the minute. Going absolutely crazy. I'm particularly happy with Ethereum, to be honest with you. I'm kind of doing technical analysis to try and disprove it at the minute. And I'm working hard to be as accurate as possible. And I kind of planned it out pretty well here. So, yeah, that's not going well. But cryptocurrencies are making quite a bit of money in the minute. Just remember that cryptocurrencies are ridiculously volatile. And as soon as you put your money in, it'll probably go the other way. Thank you very much for watching, everyone. And if you enjoyed this video, please feel free to like, subscribe, and invest.